Good morning, everybody. This is the Live Market Open for Tuesday, February 9th. I'm Yohay Elam, ForexFrench.com and Market Movers Podcast.com, doing the show as usual for FX Street. It's Tuesday morning. China is closed, but the world is still worried. We'll cover recent developments, various charts and levels, the next 24 hours, and of course, your questions. I see quite a few of you already in the room. Good morning, everybody. So if you cannot see the chat beside the video, please go to the address on the screen, tlk.io/fxread-forex-live-video. Okay, so what do we have in markets? We have basically doom and gloom coming back once again. Okay, here, well, let's look first at the chart and then can understand what's going on. This is the dollar-yen chart. The yen is a safe haven. The yen is sought in times of trouble. No, if you cannot... Please refresh if you cannot see the video. Anyway, it's currently dollar yen fell below the previous line in the sand. We talked about 116. That was the line when they began talking about intervening, and they began talking that they're watching currency movements. This is 116, and this is the move here. It was on January 20th. Okay, and then from there the dollar yen began moving up. And then the Bank of Japan indeed announced some action, some measures, a negative deposit rate. Okay, limited one, but anyway, the Bank of Japan went negative. Dollar yen went shooting up to the sky, 121.50. Since then, it's been going down, especially with last week's fall in the US dollar. Okay, with the ISM non-manufacturing PMI. Yesterday, we had it stabilizing just a bit, but then came the big crash. Okay, this is an hourly chart. We fell in the US session below 116, and then in the Asian session alongside Japanese stocks, Nikkei fell, I think, 5% at the peak. Don't know how much it closed, but anyway, we fell to a low of 114.20. Okay, levels last seen quite a long time ago. Currently, we had a nice bounce, but volatility is extremely high, as you can see. We're at the lowest level since that's quite a long time. Okay. At least we respect some support. Okay, this was support back in November 2014. So at least we have dollar yen respecting an old support line, but it's a big crash. It's a safe haven flow. It's not what the Bank of Japan wants to see. There's a long list of troubles that move markets. Okay, I'm glad everybody can see the show. Anyway, good morning, everybody. Dollar yen is the biggest mover because the yen is a safe haven. Okay, also the euro is a safe haven, but not as much. Yesterday we had it fall under 111, then it recovered once again. I still see 112.15 as a line of resistance despite these three spikes, including one a few hours ago, early in the morning or middle of the night. Currently back to the previous range, 111.45 to 112.15, a bit choppy on euro dollar. Not as exciting as the yen. Okay, but before we talk about other currencies, which are naturally falling because when the safe havens rise, the others fall, let's talk a bit about the reasons why we're seeing all these movements. Okay, so yesterday during the US session, we had Chesapeake. Hope I wrote their name correctly and I pronounced their name correctly. Anyway, it's an oil company. They were rumored to ask for bankruptcy. Okay, their financial position is a bit uncomfortable, and they contracted this company. Now, afterwards, they said that this company is a company they work with for a long time, and it's not for bankruptcy. And they denied everything, and the stock managed to recover. But it didn't affect only the stock of this company; it affected the whole market and added to negativity. Okay, in Europe here, Deutsche Bank, the biggest bank in Europe, or no, maybe not the biggest in Europe, but I'm sure it's the biggest in Germany. The second one is Commerzbank. Well, both banks, Commerzbank and Deutsche Bank, their stock fell by almost 10%. There was some talk that the capital position of Deutsche Bank is not optimal. Not going to get into that, but just know that we have to open our eye on stocks, as we said in late September, early October, I was talking about Volkswagen stock. What else was Citibank, I think. Anyway, you should open your eyes for when in times of trouble, individual stocks can have an impact also on currencies, okay? So these are two stocks to sort of watch out for a bit more than others. During the night, Japan. In Japan, the 10-year bonds, their yield fell below zero. In Germany, it's only up to 8 years, but also in Spain, it's up to 2 years. Anyway, in Japan, it's already first time that a 10-year, the benchmark bond, the one that everybody looks at, is negative, okay? And that is a reflection, in theory, of worries about the global recession, a slowdown, that the safe haven bonds are, everybody's buying bonds. The yield in stocks will be so bad that it's better to basically pay the Japanese government for buying their bonds. I think it's also, of course, a function of central bank action. When a central bank buys bonds, that pushes the yield lower, okay? Now, another interesting thing to watch here is that China is closed. It's the new year. It's the year of the monkey. It's a whole week of celebrations in China. China is closed, so you cannot blame China for this. And it's too often that everybody blames China. And oil prices in China usually were to blame. Oil is, of course, lower, okay? I'm not saying it's... But it's battling the 30 line, but it's above the lows seen in the past. It's above 27.50. So it's lower than yesterday, lower than last week. But still, at the time we're speaking now, it's above $30. So it's not so much about oil, just a bit. More about individual stocks, worries about bankruptcies, worries about the global slowdown, including in the United States. It's not only China. Basically, it's a mix, okay? Anyway, see here a few comments, questions. German economical data now clearly worse than expected. Short-term effects of refugees, infrastructure have been exhausted. As you say, will it now wait on German data on an increasing pace? Well, yes, also this morning we've seen, let's look at some data points. We didn't have major data points in the past 24 hours, but we did have the Eurozone Centix confidence down to 6 points, worse than expected yesterday because of global worries. I'm not sure it's because of the refugees. Well, in Canada, building permits were actually positive. In Australia, business confidence was stable. But to your comment, your question, in Germany, in the Eurozone, also we had this morning German industrial output falling 1.2%, worse than expected. Okay, let me refresh. Here we go. So the trade balance, current account were okay. But look, we have a fall here, month over month in December of 1.2% in industrial output, worse than a rise was expected of 0.4. Trade balance, well, current account was okay, but the trade balance was a bit worse than expected. That means exports to China are not as good as they were. Exports fell indeed 1.6%. They were expected to rise, but also imports fell. It means also less trade. Imports were expected to fall. These figures are not top tier. We'll get top tier figures in on Friday, the GDP. IFO is top tier. This is sort of second tier. I mean, industrial output is more important for Germany than for other countries because Germany is a country that actually produces a lot of stuff, manufactures. And not all the countries in Europe or in general in the developed world manufacture that much. And if the German locomotive is slowing down, then it's bad for the whole continent, for the whole world. Now, it's important to note industrial output is a bit volatile, so maybe we should be a bit more cautious about this, a bit more with a grain of salt. But anyway, it's sort of a streak of bad news, stocks, companies, safe haven bonds. Another comment here, that's kind of humorous when banks run out of money. I blame China, everything, it saves time. Yeah, that's of course always the easy solution, to blame China. Lots of analysts do that. Also the Federal Reserve is a bit focused on China, but it's not only China, it's a lot of other things over there, okay? Must say that European banks, some of them are in trouble for quite a long time, and everybody knows that the European central banks' stress tests are not worth that much. We've seen the biggest example was with Ireland. In 2010, the Irish banks passed the stress test. A few months later, they had to be bailed out by the state and then bailed out by the whole Eurozone, okay? And Rick says that you got long on dollar yen at 114.50. Good on you. So you're already in the black 100 pips? Nearly, okay, that's quite a move, yeah. You got, well, very close to the bottom. Yeah, very volatile dollar yen. I believe we'll hear a lot from the Japanese government and the Japanese central bank, and that they will talk about more easing. The biggest opportunity for the Bank of Japan to ease comes in April when they have their semi-annual forecast, okay? But they can also act beforehand. Some people are talking about the second week of March. The Bank of Japan meets 14 times a year. It's the most busy central bank. The Fed and the European Central Bank meet 8 times a year. Many central banks meet once a month, 12 times a year. Maybe only the Swiss National Bank meets only 4 times a year, but they act also out of schedule. Okay. Comment here, looking 417 short. Yeah, I think we'll have a lot of movements until then. I'm happy to see volatility in dollar yen. All right, let's talk a bit about other currency pairs. The pound trades when in times of trouble, more like a commodity currency. So this morning it's up 10 pips, but all in all, we fell very nicely to support here at 143.65. Well, a bit below, no, yesterday, but all in all, it does behave quite nicely in technical terms. Currently, we're a bit higher, 144.40. I still see the line here of 144.50 as some kind of resistance, even though we had a spike above this line. Further resistance, 146.50. Support 142.30. Nothing pound related, of course. Regular worries about the economy, Bank of England's dovishness, and the EU referendum coming up in the summer. Okay, before we move on, I see a question from from Carol. If the euro is a safe haven now, how come the big drop in euro pound just now? Let's take a look at that. First of all, we're seeing some kind of relax this morning. Okay, we're seeing the euro a bit less safe haven this morning. I mean, after the big move towards the upside, and also the yen, as Reg took advantage of this. Dollar yen is up this morning quite a bit. Okay, we're already 130 pips from the lows. The lows were seen in the middle of the night, more or less when Tokyo opened. So it's never a one-way street. Now we're seeing a small correction, a small risk on. In general, we're still in a risk-off environment. The mood in markets is still negative. So euro pound is now falling. The European Open sees some kind of correction, some kind of ease, less demand for safe haven euro and yen, more demand for the pound. But all in all, well, look, it did manage. This is an interesting development. 77.40 is an interesting line. We went all the way up to 77.86. I mentioned this as an interesting line because back here, look how nicely 77.40 worked as support in late 2014. So the move above this line is significant. It might be a false break, as now we're seeing the pair fall a bit below. Okay, so we've seen the spike above this line, and now we're falling a bit down. 77.86 was the high when things looked even worse in the depth of the Asian session. Support here is at 76.60 more or less. Okay, so now we're seeing, to answer your question, some kind of correction in the past hour or so, but we're 50 pips down from the highs. But all in all, I think the trend in the past, during this trading week, is quite clear. Safe haven euro in demand, not so safe pound, not in demand. Okay, let's continue. The big comeback kid, the Canadian dollar, which went all the way from almost 147 down to 136, the 136 handle. Okay, over 1,000 pips, is now moving higher. It's oil prices and also risk off. Again, in the past hour or so, we're seeing the Canadian dollar strengthening a bit, some kind of small improvement. but the trend in the past hours is relatively clear. The Canadian dollar is not falling so much because oil prices are not falling so much, okay? So again, this fall is more related to worries that it's not only oil prices, it's also oil companies. So the Canadian dollar didn't reach 140, dollar CAD did not reach 140. It is currently battling with 139.10, which was support. 137.87 works as nice support, 140 as resistance. Okay. Aussie dollar down in the range. Again, now it fell below 70.40, which worked as some support. It's not such a strong line. Worked as support here and here. So we did fall to the lows of 70.19. Now we're back to 70.60. I still see 71.50 as resistance, or 71.40. 70, of course, the line below is clear support. Okay. Kiwi dollar 66.15. Found support very, very nicely here. The line we talked about, 65.80. It already crossed 67 when the mood was positive last week, especially for New Zealand with the excellent jobs report, which still echoes. Again, now we're seeing a bounce in the past hour or so, or a bit more, but we felt the support, and that also helps the bounce. Okay. Dollar Swiss 98.62. I suspect there's work there from Swiss National Bank actually might be a bit asleep. So we're getting away from parity to the downside. Euro Swiss continues falling. Look how nicely the pair moved higher in the past and now it began falling. Perhaps the Swiss National Bank is a bit asleep. We did not fall below the round number of 110. I suspect, again, no evidence that the central bank there might be at work. Anyway, not a favorite pair to trade. Euro yen is, well, as I said, the euro is seeing some limited safe haven flows. The yen is seeing a lot of safe haven flows. The dollar yen collapsed. Euro yen is back to the previous range of 127 to 129. After all this nice rise we've seen here, thanks to the Bank of Japan. So the Bank of Japan has seen 132.25 on euro yen thanks to its move, but then we fell down. I said a few days ago that despite the falling dollar yen, at least the yen is weaker against the euro. Not anymore. Back to the previous range in euro yen and to much lower levels on dollar yen. Pound yen, again, risk off means stronger yen, weaker pound, 166.56 at the moment. The low so far 164.80. We still have more to go to the downside at 163.80. Okay. Resistance at 170. This is a very, very, very volatile pair. Okay. Talked about lots of pairs. I mentioned oil. S&P futures, I think, are a bit higher. Yesterday we had quite a crash. Again, euro dollar is sort of the dollar is recovering a bit against the euro. Euro, some profit taking early in this European session, but the general trend is risk off. Risk off is best seen in dollar yen. So yeah, we have a 110 pip bounce from the bottom. But this is quite an extreme move for the yen. It went well yesterday with the fall of the U.S. stocks, all those stocks I mentioned, and during the Asian session, during the night, with the Japanese stock market, with the Nikkei that crashed, and Japanese yields that went negative on the 10-year. Okay, what do we have today on the agenda? German industrial output. We talked about that. It came out worse than expected. 9:30 GMT, we have UK trade balance, okay? Second-tier figure. It does have some tendency to move markets. We're expecting here a deficit. That's the non-EU figure, sorry. No expectations here. Sorry, here we go. Last time we had 10.6 billion pounds. This time 10.3, more of the same. Shouldn't have such a big impact. The main event for today is for me at least, the JOLTS, job openings. It's a figure that is lagging. It's for December, but it's a wide figure measuring how many job openings are there and how many quits are there. When someone quits his job, it means that he or she has confidence in finding a new one, or switches to a better paying job or a better job in general. So it's worth looking also at the quits, not only the openings. We stood on 5.43 million annualized in November. Now we're expecting more of the same, 5.4. In general, these are positive figures. Okay, what else do we have on the agenda today? Yeah, well, at night, the Australian consumer sentiment. It's the figure by Westpac. Here we go. If you're awake at night, this could have some impact. But remember, now we're in an environment where individual figures matter a bit less, until the big event of this week is tomorrow's testimony by Janet Yellen. Why can't I see the implied probabilities? Anyway, I'll try to refresh this. So the implied probability is, well, they didn't show any kind of rate hike. Now they don't show anything. So that might be some error here. Sorry about that. Anyway, any questions? Let's talk a bit about more events this week. Chinese New Year holiday apparently not being able to stop the stock market crash. You cannot blame it on China. They're on holiday. Okay? One thing perhaps you can blame on China is that China published the reserve figures, foreign exchange reserves on the weekend, and it showed less than expected drawdown in reserves, around 100 billion. But on the other hand, it's still a rapid pace, and that also adds to worries about China being able to sustain the strength of the yuan. But since then it's already old news. We had more stuff. Anyway, what I'm showing on the screen, the events for this week: Chinese New Year holiday all week. Today we have the JOLTS figure. Tomorrow is the big day. We have Janet Yellen testifying. Oil inventories published tomorrow. They usually have some impact. Now, it seems recently that markets just don't care why oil prices are falling. I think that they're falling because of low demand, because China is not growing as fast. The United States is not growing so fast. Europe is not growing so fast. That's a real concern. Okay, that's a concern about the economy, and it's reflected also in oil prices. But when there's just too much supply, for example, when Iran came back online, it's not such a bad thing. Even Iran provides investment opportunities for Western companies, so it's not that bad. What we're seeing this week is the fear that it will hit oil companies, okay? So, yeah. So when it hits oil companies and it could cause sort of a roll-on effect, a domino effect, that could already be bad for bond markets, stock markets, etc. Okay. Yeah, what are the hot pairs for today? A question by Jax. Let me just finish more events for this week. Janet Yellen testifies once again on Thursday. The big event, though, is Wednesday. German GDP, top figure for Friday. Let's see how things are going over there. And the focus on the US consumer on Friday. Hot pairs for today. Well, in terms of economic indicators, we have a few. Not quite a few, we have only a few. So I would say it's less about economic indicators today. It's more about, I think, the yen. Dollar yen is of importance. Look, it's falling down once again. Let's see if we have some kind of verbal intervention by the Bank of Japan. I think we haven't seen the end of volatility in dollar yen. Okay. Dollar CAD, I think, could also be interesting. I know that not many of you like it, but so far the oil prices didn't go along with the stock market route. I mean, this week, usually it went hand in hand. So I believe we could see some action from oil. I'm not sure to which direction, but I believe we could see more action from oil, and this could impact the Canadian dollar. And yeah, I would say these are the two hot pairs for today, and perhaps the cross CAD yen could also be interesting if I talked about these two. I saw some headline jumping about a train accident in Germany. Doesn't sound too good, but let me try to find out more information about that. See if it has any. I don't think it has an impact on markets, but you never know. Happened in Bavaria. Several dead and 100 injured. Not good news this morning from southern Germany. But I don't see impact on markets anyway. Well, the euro is still gaining a few pips this morning. Earthquake in New Zealand. Yeah, there was something in Welling, the north of the South Island. I think it wasn't that devastating. Bad news is bad news, but not such a big. Checking out the New Zealand Herald, and yeah, okay, anyway. Yeah, a sad event this morning in Bavaria, huge accident. Well, as you say, elementary to Germany economy. Nothing elementary to Germany economy. Very sad, but happens once a year, yeah? Okay, sorry to hear that anyway. What else? Any questions? I mentioned... let's take a look at last week's event. Big event in non-farm payrolls, which came after the big crash. Okay, it was a very interesting event. I think it still echoes on markets. The bad news came from the headline, only 151,000 jobs gained. But wages came out better than expected, 0.5% month over month and 2.5% year over year. Okay, expectations were for lower gains in wages. And the unemployment rate fell below the psychological 5% level to 4.9%. Despite the rise in the participation rate, okay, so more people are participating in the workforce, but the unemployment rate fell. Good news as well. Other figures, employment to population ratio 59.6, a small rise. Real unemployment rate still high, 9.9. Another figure not mentioned here is that the average work week ticked up from 34.5 hours to 34.6. Now this may seem a bit meaningless, but it was stuck on this level for so long that any small rise is, of course, positive. Every hour more worked across more than 150 million workers in the United States is, of course, more output for the economy. So I would say that it's all in all a good report. If you want to see things in a positive manner regarding the non-farm payrolls, all these figures show that this economy is getting closer to full employment, okay? Because when you're close to full employment, you cannot gain more jobs. But what happens is that, of course, the unemployment rate falls and wages rise because there are too many jobs for not enough people. So it's good news. If you want to take the pessimistic path for the U.S. economy, you could say jobs are lagging, okay? The economy is slowing down, hardly growing, fears of recession. If you look at retail sales, manufacturing, things like that. So, but companies are still hiring. But this comes with a lag. This comes with a delay. Once things continue evolving, companies will begin firing and not hiring. And so this is misleading. We'll have to wait and see. Anyway, I see your question about euro dollar, right? Yeah. Let me look at euro dollar and answer your question. 112.40, good resistance for euro dollar. 112.40, well, we've seen it reach almost this line Again, I see these three spikes as not real breaks, but actually, if you look closer, they're very close together. I would say 112.40, or perhaps a bit higher here, 112.42. So yeah, you could say 112.40 is a good resistance because we've seen these three spikes. I believe that well, if things get worse, we could see this line break easily, and we could see 113, 113.75, and 114.60 next up. But the euro is lagging. There's still fear that the ECB will act in early March, 1 month to go. So this means less, and the yen remains the number one safe haven currency pair. Question here: in his latest speech, Draghi talked about a conspiracy of forces against Europe. I don't. Can you point out this specific word? I don't remember his saying a conspiracy, but he did talk about sort of clouds gathering over the global economy, worries about China, about the US, about fear of deflation, that oil prices will reach also other prices and weigh down on prices and trigger this deflationary mindset, which is negative, and that he prefers to act. That's his strongest words were that he prefers to act rather than not acting. Okay. Yeah. Also, Sinatra sees 112.42. I'm glad you guys are helping one another. That's what the community here is for. It's not only about me talking, but about you guys asking questions and getting answers from one another. Any more questions? There's been a very dense zone between August and October 2015. Let's take a look at that. Yeah, you're right. Very, very dense zone here. We did have more volatility during these months. We did have these moves up to 114.60, a few times 115. And in August, with the crash of the Chinese stock market, we went all the way to 117.12. Okay. So now, if we look at the big picture, we had it trading on lower ground since the ECB decision in December, up to the recent break higher. And now we're at levels last seen, as you said, in between August and October. So in the bigger picture, we're one level higher, okay? One range higher. 110.70 is for me the separator, but yeah, it's a bit, the line is a bit old, okay? Any more questions? Okay, let's take another look at dollar yen. Look at this big fall in the daily chart. Look how the Bank of Japan here on January 20th began talking about monitoring currency markets. The government said that it's time for the Bank of Japan to act. That was around Davos. Dollar yen strengthened. And here's the one-day move that was Friday, January 31st, all the way to 121.50. And since then, 1, 2, 3, 4, 5, 6 out of 7 trading days, business days, we've seen dollar yen falling to the lowest levels in over a year. Okay, so that's quite dramatic. The Bank of Japan must be extremely frustrated. Okay, that's for me the big story of the day. Let's talk. I mentioned the Canadian dollar as well as moving relatively slowly because oil prices are relatively stable. So here is CAD yen, of course, also falling. mostly because of the strength of the yen. If we have an improvement in the mood in oil prices and especially stock markets going up, the yen will fall, and then we could see this pair stage a very, very nice recovery. But if not, we have more room to the downside on dollar CAD. 79 is support, 82 is support, immediate support 82, further support 79 under the 80 level, 87 is resistance. I think the lines here are relatively clear. Very, very interesting currency pair, I think, in these times of trouble. Also on the hourly chart, I think we have here some nice action. Question here. The 1 hour chart in dollar yen shows that market makers are at work to ease the decline. I don't think market makers have an impact on the wider markets. Okay, there's so many forces here in action. It's one of the world's most traded currency pairs. We are seeing a correction. We are seeing European traders come to their desk, see this big fall and think, okay, this may be too much. We have a buying opportunity on dollar yen. The fall in the Japanese stock market was exaggerated, so maybe it went too far. Remember, Forex trading is never a one-way street. Big falls yesterday in German bank stocks, perhaps are seen as exaggerated, as cheap for many the current levels. Markets tend to over and undershoot all the time. Okay. Any more questions? There are forces in the global economy that are conspiring to hold down inflation. Okay, let me look at that. Yeah, well, it's not conspiracy. Oh, sorry about that.
The economy can be very outspoken.
Why can't I stop this commercial? But I'm looking at this headline of Draghi saying there are forces in the global economy today that are conspiring to hold inflation down. Okay. What matters is central banks. Okay, it doesn't sound like conspiracy theory, but he talks about oil, of course. Yeah. Is my biggest take from his speech is that he was talking about more or less conspiring, but that he's fighting an uphill battle and he'll do whatever it takes, as he said also in the famous speech in July 2012, and that it's better to act than not to act. The unintended consequences, the secondary effects of action are nothing in comparison to sitting on the hands. So he'd rather act. Of course, he's creating higher expectations. He wouldn't want to make them too high because maybe he will not be able to deliver. He did deliver he under-delivered in December. He did a lot, but it wasn't enough for markets. Anyway, all central banks are now dovish. Dovishness is no surprise. It's a race to the bottom. Okay, that's about Draghi. Anyway, euro dollar is not impressed. Safe haven flows are stronger than the fear of the ECB. Okay, maybe had it not been for Draghi's talk, we would have seen euro dollar go even higher. It isn't moving in the same manner as the yen, but yeah. Sinatra says my short hourly analysis was based on a technical method learned from Zahir Anwari. Okay, worth checking that out. Anyway, we're seeing 110.70 is clear support. 112.42 is the high level we've seen. Why pound dollar? rise. Pound also risk currency. The pound is also risk currency, not a safe haven. Currently, it's recovering just a bit. Okay, it found support here at 143.65. All in all, it's down from the high seen last week. It's trading more like a commodity currency and less as a safe haven one. Okay, so now we're seeing some kind of correction, but it's not huge. It's 25 pips this morning. Okay, time to begin the wrap up for today. This is the wrap up for the live market open, the morning show for February 9th. It's Tuesday. It's a risk off mood in markets, doom and gloom everywhere. The most stark example is, of course, the Japanese yen. Total collapse of dollar yen, total strength of the yen across the board, not only against the US dollar. Broke yesterday under the line in the sand for the Bank of Japan. What was seen as the line in the sand of 116 went all the way to 114.20. Currently 100 pips above the lows. What pushed the worries up and the yen up and the rest down? Okay, so rumors about Chesapeake, an oil company, that they're seeking bankruptcy protection. These rumors were denied quite strongly, quite nicely, but it still had an impact. Worries about Deutsche Bank and also Commerzbank in Germany both fell. Both stocks fell quite a lot. That was yesterday. We had this Wall Street falling yesterday. We had the Nikkei falling tonight, and this included Japanese 10-year bond yields going negative for the first time for a major economy to have the 10-year yield go negative. In Germany, it reaches only 8 years, but in other countries, we see negative yields more often than not. Anyway, that also sort of weighs on the sentiment. This comes despite the fact that China is closed all week because of the New Year holiday. And oil usually goes hand in hand. Crashing oil with doom and gloom. It's only slightly weaker. It's hugging the $30 level. I would say it's also, but it's still important to note that oil at $30 a barrel is low in any case. Okay, let's look at more charts in the euro dollar in the high end of the range, 111.94. I still see 112.15 is worthy, but 112.40 is also worth mentioning after these three spikes. 110.70 is support. Pound dollar found support at 143.65. Currently battling resistance over there, 144.50, 146.50 is further resistance. Support at 142.30. Dollar yen, at least it found an old support line at 114.20. 116, I think, is the line that the Bank of Japan would be aspiring to see dollar yen cross over. Dollar CAD, Canadian dollar, weaker, but not crazy. 139.10 is fought over. This was a nice line of support. 137.87 worked as support. 140 is resistance. Aussie dollar battling the 70-40 line. 70 is strong support. 71.40, 72.20. Kiwi dollar found very nice support at 65.80. Resistance at 67. Risk off means stronger euro, much stronger yen. Weak commodity currencies, Aussie, Kiwi, CAD, and a weaker pound. Okay. Let's talk about what moved markets. Other things that were negative, especially in the Eurozone. Centix confidence fell more than expected. German industrial output fell. It was expected to rise. Also, some bad news. Today we have UK trade down at 9:30. The main event for today is not that important. It's a JOLTS release in the United States. Can give us another picture of the labor market. And we have also Australian consumer sentiment. The big event this week is Janet Yellen. Will she come to the rescue of markets? Promising not directly some kind of a rate, no rate hikes this year, at least not in March, not in June, or will she say everything's okay because of the recent jobs report, and that could make the atmosphere in markets a bit worse, okay? Before we head into the sunrise or sunset. I see a few more questions. Posted this with Dale yesterday. Had drawn both blue trend lines around January 28 to see the uptrend and line in play, giving up temporarily for the horizontal. Let's look at what. Yeah, we see there these lines of confluence. Let's share it with everybody. Ichimoku Cloud suggests that pound dollar will keep hovering above the horizontal line. Yeah, maybe this horizontal line provides some kind of support. Anyway, we're in relatively choppy markets. Okay. My one and only question today, where do you think gold is going over the next 2 weeks? I think currently gold moves because of speculation. All central banks are dovish at the moment. Okay. Dovish central banks means they're ready to print more, to go negative, to push money, to make paper money worth less across the board. No currency is worth more than another. Of course, the Federal Reserve is, in theory, in a path of tightening. They also have a very fat balance sheet, and they're not raising rates very fast. ECB is ready to print more. Bank of Japan went negative and is ready to print more. China could inject some kind of more liquidity. That's why gold prices are rising, because it's sort of a safe haven when there's too much money. On the other hand, we've seen these gold bugs beaten quite hard because no hyperinflation ever came, and the world is even looking worse in terms of deflation. So in the next 2 weeks, where's gold going? I don't know. Give you a good answer would be quite hard. Oh, that's silver. Oh, that's me on the screen. Let me put the chart once again. We crossed 1200. We're moving high. That's what's happened in the last few weeks. Resistance, as I see it, is at 112.25. We had a very, very nice rally. I think we would need some consolidation before the next move higher. And yeah, let's see if Janet Yellen says tomorrow that shows optimism, cares less about stocks, more about the US economy, about jobs. I think you could see a lot of hot air coming out of gold, and it could fall back down. Yeah, that's an honest, I don't know. I can just give you my scenarios for Yellen, and they may be wrong also on these scenarios. Anyway, that's the reason that oil is moving higher. Pure speculation. Nothing fundamental, okay? Doesn't mean there aren't trade opportunities to buy it, but just it's important to understand what's behind it, okay? So thank you very much, everybody, for coming to the show this morning. Wish everybody safe and successful trading day, as always. And we'll be here tomorrow for a preview on Yellen to see how markets, if they recover or not. We're back to doom and gloom. After we finally seen the US dollar moving across the board, either down or up, we're back to risk off. That means stronger euro, much stronger yen, and all the rest are weaker. Okay, let's see if this prevails. So thank you very much. See you tomorrow. Bye-bye.